Good morning, everybody. Welcome to the Moving Markets Podcast. It is Friday, July the 17th, 2026. There is the opening bell of trading. The markets are off and running, and I'm just going to tell you straight up, we are looking at probably another pretty ugly day. I think things are going to be as bad, if not worse, as yesterday. Um, and I'm going to address a couple of our individual trades in just a moment. Before I do that, maybe let's talk about a little tiny sliver of silver lining in all of this. Before I even do that, I'll get to that in a second. Let's first just show you, in case I do this. I don't know if I need to do it. I do it probably out of habit more than anything else. Let me show you what the markets are doing right here at the open. We've got, of course, the Dow Jones Industrial Average, the NASDAQ, the S&P. They're all down. They're all down pretty dramatically, both pre-market, and it looks like they're opening that way right out of the gate. The Dow Jones down 540 some odd points. 525, the NASDAQ down 600, the S&P down 86, about 1% for the Dow and the S&P, over a little over 2% for the NASDAQ. And again, these are ugly moves. And pretty much everything that we are trading, with the exception of Lockheed Martin, which is Lockheed Martin. What do you know? Up $8.23, back well above the 521 mark, back into the area that we so desperately kind of need it to be in. Hallelujah, I guess, for lack of anything better to say. It is having a good day today, thank heavens. This is where we find ourselves. And then we've got Netflix, which has dropped down and putting us very well within our range that we need to be in. Now, it doesn't expire for a couple of weeks, but very well within the range that we need it to be in, to get out with our target profit. So right out of the gate, we are looking good on our Netflix trade, just looking really crappy on everything else that we're doing. So it's, the silver lining again is that Lockheed Martin is doing what we needed to do. Netflix is doing what we needed to do. The bad news is we're getting killed on AMD. We're getting killed on Google, JP Morgan. Dang, JP Morgan, the one that I thought there was a chance that was going to hold at or above 340. It's not only dropped, unfortunately, JP Morgan, with today's drop, it's Murphy's Law. Whatever the worst thing is that could happen, that's what's happening. Between yesterday's drop and this morning's drop, JP Morgan, son of a gun that it is dropping right smack dab into that no man's land. One of our members referred to it as the valley of death. That halfway point between, on a long iron condor, it's that halfway point between the two long options in a long iron condor, which is exactly the spot that you don't want it to sit in. Our long options are a 332.50 long put and a 337.50 long call, and it's dropped right down to 335. I mean, literally, it is sitting halfway in between the two places that we want it to be. We either want it to be, moving well down below 332.50, and don't assume it won't go there today. Don't assume for 1 second that it couldn't go that far today. It very, very easily could. And then, worse than that is that we could adjust the short call down here. We could adjust the short put up here and sort of squeeze it into a traditional iron condor, only to find that it breaks out of there dramatically within a day or two, and we see it doing again exactly the opposite of what we would want it to do. So it puts us in the absolute worst position we could possibly be in. AMD, my gosh, 3 days ago, 4 trading days ago, AMD looked like it was going to be an easy run to the end of the week. I mean, a week and a half ago, it hits a new all-time high of 585 or pretty close to it. It stumbles a little bit, it comes back up, and just 3 days ago, it's back up at 570. And all of a sudden, on three consecutive trading days, it has gone from 570 down to 470. You're talking about almost a 20% loss in the value of the stock in just three trading days, just absolutely getting killed with another $30 down today, another 6%. I don't need to go on and on and on. I don't need to sit here and recap with each individual trade how it's literally beating the crap out of us and beating the crap out of our portfolio. I know what you guys want is answers. What do we do? How do we fix this? How do we stop the bleeding? How do we possibly get this worked into a better situation that we're in right now? In every single case, AMD, Google, um, Micron, Nvidia, I'm not as worried about because Nvidia, we have a longer term trade on. Nvidia, I think honestly, I think we're going to be fine on Nvidia. So I'm going to leave Nvidia out of the discussion for right now. AMD, only chance to salvage anything on this trade is to roll it into a bear call and to do it like ASAP. We've just simply got to adjust this trade to lessen the loss. Google, um, if you did not, if you rolled it out as we instructed, and I know not everybody was successful in doing this. Some people got out of Google, others rolled Google out and were able to get Google out to a 331 um, long iron condor. If you did that with Google, you're in absolute great shape. If you did not, you've got to roll Google into a bear call spread. The 360 short call, you're simply going to roll it down, um, keep it in the same expiration that it's in right now, roll it from a 360 down to a 355. That's honestly, that's the only thing you can do. And get some credit there. You might have to roll everything out 1 week in the process of doing that. AMD, you're rolling the 500 strike. You're rolling it down to probably, again, keeping it in the same day of expiration. You're probably rolling it down to a 492.50. Um, Again, probably the only thing you can do right now to somewhat salvage this trade. It's not. I don't expect it to turn around and soar back up in the next few days. It might have a day that it bounces. It might have a couple of days that it bounces, but don't expect it to just suddenly soar back to the upside the way it's come down. And if it does, and you've adjusted it to a bear call, at that point in time, all you can do is just pull the ripcord and get out of the bear call like instantly, immediately. So, these are a couple of the moves that we're going to make. I'm going to be sending all of these moves out when I'm done here with the presentation. I'm going to be sending these out. Um, Let's see. Lockheed Martin. I love what Lockheed Martin is doing right now. If you have a chance to get out of Lockheed Martin where it's at right now, I think you could do so. Maybe not for a profit, but for a break even. I say get out of Lockheed Martin. Don't mess around with that one anymore. So basically, it's AMD, Google, and Micron that I'm going to be sending out immediate adjustments with. JP Morgan is now the long call is in the money. But JP Morgan would have to come back about another dollar and a half from how far down it is right now to salvage this one. Probably with JP Morgan, we roll the call side out 1 week. If we just went out 1 week, straight 1 week in time, I show that we could pick up about a 60 cent per share credit. If you can do that right now, do it without hesitation. Don't wait one split second on that one. I tried to do that as I'm speaking with you right now, for those of you that are on live, and immediately the credit dropped to only 43 cents. I would say, honestly, on this one, anything better than a break even, you get out of this, you roll this one out 1 week. I think JP Morgan is the one that could actually rebound and come back a little bit. Um, I just put in a limit order to try and roll it for a 35 cent per share credit. I'm just rolling the call side out 1 week. 35 cent per share credit. And of course, the mid price immediately moved to only a 20 cent credit. I would do it for a 10 cent credit or a 5 cent credit or a break even. If you can get this one rolled out in time, roll it out in time a week. It's such a no brainer to roll this one straight out. I just tried for 10 cents and it changed to 6 cents, and now it's back up to 44 cents. I'm talking all credits. It shows that we could roll it for a credit, try to get a credit out of it. Um, so that's the thing with JP Morgan. We might not be JP Morgan, it could come back above 340 today. And if you see an opportunity to just exit the trade for a break even or better, just get out. But if you can't, try to roll it out 1 week in time. I actually think we'll be in good shape if we can roll that one out 1 week in time. And then the others, I'll send the adjustments to bear call spreads. Look, moving forward from today, today my focus is going to be 100% on salvaging whatever we can out of these open trades. In every case, it is probably going to be nothing more complex than turning it into a bear call, or like I said, maybe in the case of JP Morgan, maybe just rolling it out in time. That's going to be the situation with every one of these. Going forward, for the remainder, and by the way, I was just able to roll the bull call side of JP Morgan out to the 24th, and I did it for 2 cents per share credit. Probably did not quite cover my commissions. I don't care. I'm not stressed about it closing today and putting me in a really, really bad spot trying to close it today, or just sitting here all day long, crossing my fingers that it goes back above 340 per share. So that one is done with. For today, it's done with. And like I said, Netflix looking good, Lockheed Martin looking good. And then that still leaves us with AMD, Google, and Micron that we've got to adjust today. So moving forward until probably the first part of October, I will not send a single new trade out that is not a non-directional trade. And the reason we've got to be non-directional is we can't afford to have happen what happened these last 3 days in trading. I'm not using this as an excuse. I'm just going to give you an explanation. A couple of weeks ago, we had some weeks that we didn't send new trades. And then when I sent trades, I could not find any long iron condors that were a decent price. No matter what I did, the price of the trade was so similar to what the spread on the trade was that it just became almost impossible to find a trade that we could execute on. It just sucked. There was nothing. I don't want to say there was nothing else I could do. It just sucked. It was a near impossible situation to find long iron condor trades. So I looked at some in the money bull calls that looked good, thinking that some levels of support would hold. And when those levels of support collapsed, it just absolutely ate us alive. It just killed us. And really, in a matter of a couple of days, it just absolutely killed us. Nothing I send out between now and the end of the summer and early part of fall will be anything but non-directional, because I no longer, I should have known better, but I don't trust that any level of support is safe in any way, shape, or form. So that's going to be simply the way we play it going forward. So there's not a lot more to talk about. I could sit here and bemoan the fact that everything went against us and the gods of the market conspired to ruin us in a couple of days. None of it matters. What matters now is we get some trades in place that have a better chance of profiting, and we kind of fix as much as we can. We lessen the losses on the trades that we have open, and moving forward, we go for a while strictly non-directional. I mean, there's again, I don't trust for one split second. I don't trust anything to hold a level of support or a level of resistance for that matter. I wouldn't do an in the money bear put spread right now. I just don't trust that it will work out for us. So that's going to be the plan moving forward. Just so you know, JP Morgan Chase is now above $3.40 a share. If you get an opportunity to get out of it, get out of it. Don't hesitate to get out if you can get out with a break even or a small profit. Um, but that thank heavens is looking much better. Lockheed Martin now trading above 520, and Netflix trading down where we needed to trade. So I'm happy for that. Uh, all right, I'm going to wrap up right there and get to work on sending out adjustments, and I will continue to look for some potentially good new trades that are non-directional, and we'll try and right this ship very quickly. Try to have a good weekend, and we'll see you all on Monday morning. Bye bye.